All right, today we're tearing into the brand new 2025 annual report from Foresight Solar Fund. Now, this is a massive billion-pound player in the renewable energy game, so let's see what they've been up to.
You gotta love the honesty here. The company's own chair, Tony Roper, comes right out of the gate with this. He's not pulling any punches or trying to sugarcoat anything. And that really sets the stage for what we're about to see. A story of some serious challenges, but also, hopefully, some real resilience.
So, that's the big question, isn't it? Amid all these challenges, how did one of the UK's biggest solar funds actually perform? And, maybe even more crucial, what's their game plan to fight back? That's exactly what we're going to unpack right now.
Okay, but before we dive into the nitty-gritty of their performance, we first need to get a sense of the scale here. Just how big is Foresight Solar? Because trust me, it really puts everything else into perspective.
So this is their playground. We're talking about an absolutely massive portfolio of these huge solar farms, plus, and this is super important these days, battery storage assets. And they're not just in the UK, they're spread out across Spain and even Australia.
And when we say massive, we mean it. Look at that number, £1 billion. That's how much capital they have deployed across this whole portfolio. So yeah, this is not some small-time operation. This is a real heavyweight in the renewable sector.
So what does £1 billion get you in energy terms? Well, it translates to roughly 2 gigawatts of total capacity. And that's counting both what's already up and running and what they're still building. That is a huge amount of power being fed into the grid.
And just to get super specific, if we look at what's actually online right now, at the end of 2025, their operational portfolio sits at 994 megawatts. That's the hardware that's spinning the meter and bringing in the cash. So the question is, with this huge base of assets, how do they actually make it all work?
Right, so how do you turn sunshine into actual shareholder value? Well, the report calls it their clean energy cycle. It's a pretty neat model, so let's break it down.
I actually love how they lay this out. It's basically their whole business model in 4 simple steps. First, they have to find and buy the right opportunities. Then, they get to work developing and building them out. Step 3 is all about running them efficiently. Operating and enhancing them. And finally, and this is the clever part, they either hold on to the assets for a steady cash yield, or they sell them and recycle that money right back into step 1. It's this continuous loop, always churning to create new value.
And this is what that cycle actually produced in 2025. And check it out, it's not just about the financial side. Although, hey, £92.8 million coming from the assets is nothing to sneeze at. But look at the other pieces. Over 1,000 gigawatt hours of clean energy generated, and they kicked back over £250,000 to local communities. It's a 3-pronged impact.
Okay, but remember what the chairman said at the very beginning. 2025 was a challenging year. And when you look at the report card, yeah, it was definitely a mixed bag. It's really a tale of 2 different stories.
So on the one hand, the nuts and bolts of the business were humming along just fine. Their UK assets actually did better than expected, and they had plenty of cash to cover their dividend payments, which is great. But, and it's a big but, the financial markets were just brutal. Their net asset value, we'll get to that in a sec, took a nosedive. And their share price, it was trading for way less than what the company was actually worth on paper. You see this happen sometimes when things like interest rates go up, making other, safer investments look more tempting.
Yeah, let's just pause on that term for a second. Net asset value, or NAV. It's super important. The easiest way to think about it is this. If you sold off every single solar farm they own and paid off all their debts, the money left over would be the NAV. It's basically the company's underlying intrinsic worth.
Okay, so here's our starting point. At the end of 2024, their NAV was 112.3 pence for every single share. And flash forward 1 year, it dropped to 99.2 pence. That's a 14% hit. So what happened? Well, the report points the finger at falling predictions for future power prices. Think about it. Natural gas got cheaper, and a whole bunch of new renewable projects came online, flooding the market. That's the headwind everyone is worried about.
All right, so that's the setup. A really solid company on the ground, but facing a seriously tough market. So, what do? Well, the report lays out their game plan pretty clearly.
And the absolute cornerstone of their strategy is something called capital recycling. This is the key to the whole thing. Basically, they sell off some of their older, mature, steady-eddy solar farms, which frees up a bunch of cash. Then, they take that money and plow it into brand new projects that are still being built, projects that have the potential for way bigger returns down the line.
So, this capital recycling idea fits into a bigger 3-part strategy. First, you've got the recycling itself,
Sell high, reinvest smart. Second, they are full steam ahead on building out their pipeline of future projects. And third, they're being clever with hedging, locking in their power prices now so they're not at the mercy of those crazy market swings later on.
And if you want to see why that pipeline is such a big deal, this chart says it all. I mean, just look at it. The stuff they have in development, over 1,000 megawatts, is now actually bigger than everything they currently have online. That right there, that's their growth engine for the future.
But, a plan is just a piece of paper, right? You need people to actually make it happen. And the report makes a big point of this. It's the investment managers team, the folks on the ground who are finding these new projects and making sure the existing ones are running at peak performance.
So, let's zoom out and put a bow on this. We've talked about the money, but what's the actual real-world impact of all this? And what's the one big question that's left hanging over everything?
Well, the impact is definitely tangible. Get this, in 2025 alone, they generated enough clean energy to power more than 380,000 homes in the UK for a whole year. That's not just some abstract statistic. That's a huge boost for energy security and a real move away from fossil fuels. And on the environmental front, we're talking about almost 360,000 tons of carbon emissions that didn't go into the atmosphere. So it's pretty clear that the actual business, the day-to-day stuff, is absolutely delivering on its green mission. It's proof that you can put big money to work and have a really positive impact.
And that brings us right back to the central puzzle, the final critical question. You've got this fund with great assets that are working well, but then you've got the market, which is just skeptical, right? It's keeping the share price way below what the company's actually worth. So, can this new strategy, this whole plan of recycling capital and building for the future, can it be enough to win back investors and close that value gap? Because they're on the clock. The report mentions a discontinuation vote coming up, which could literally put the fund's entire future into question. Now that is the billion-pound question.